Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Some of the ILNFS group companies are moving higher in today's trade. So, for instance, ILNFS Investment Managers is up close to about 8.5%. It's got thrashed this entire year. It's down about 65%. But ILNFS Invest Managers is up close to about 8.5%. ITNL too, after losing close to about 12% just yesterday, has rebounded a tad bit, so that too is up close to about 3%. A couple of the other mid caps which deserve mention: Redington, which had a big fall yesterday, is recouping some of that, so that's moved up on pretty good volumes and now crossed its 50-day moving average as well. Ashwani Gujral is here with us on the show. Ashwani, pretty sideways at least for the indices. Your thoughts on the day so far and the outlook?
See, the way to look at the market is that we are not showing follow through as of now below 11,400. So that way, the market, because lack of confidence, etc., is not able to immediately move higher strongly. But my sense is that overall, private banks is the space which has been beaten up, black and blue, and that is where some sort of buying is now visible, and possibly second half a few more of these private banks, in which I include HDFC Bank, Kotak Mahindra Bank, Yes Bank, Indusind Bank. I think these guys are due for a rally, and that will take the bank nifty higher. So my sense is that the market is ready for some upside, possibly rupee etc. may help. But I don't think incrementally getting short on Nifty or banks is really a productive opportunity. So that way, you can still get long. Stops are close by. Tomorrow you have a bank expiry. So some upside should be due. Having said that, Indusind Bank is a buy with a stop of 1840, target of 1875. It's near its 200-day moving average. That's not something you see regularly. Kotak Mahindra Bank is moving higher from the lows of about 1220 thereabouts. So this is a buy with a stop of 1200, target of 1265. And Sun TV you can sell with a stop of 680 and look for targets of 645.
Okay, all right. Thanks so much for that, Ashwani. But I wanted your view on Page Industries. The last few minutes, that stock has taken off. It's a rather large stock, but volumes are picking up as well out there. The intraday chart of Page Industries should come up for you. Remember, the last few trading sessions, it corrected from around that 35,000 plus odd mark. But just take a look at that. That stock is surging away just in the last 20-25 minutes odd. Ashwani, what's the call on Page Industries? It's been a multi-bag over the last decade or so, the last few weeks, last few months as well. How's it looking on the charts?
Well, I guess macro issues don't affect
For sure. It's a necessity.
Well, a very brief and minor correction, and already it's trying to show strength. The first day market shows some upside. So my sense is that 38, 39,000 should be the next target. A good time for any sort of investor, trader to get into Page Industries. I think these sort of stocks hardly correct, and once the market moves up, I think it'll be at fresh highs much before the market.
Okay. Let's get in some more trading ideas from Rajat Bose. He joins us too. Rajat, how are you approaching trade? The mid-cap index is actually inching up as we speak, and your individual trading ideas.
Well, I have two trading ideas. One is Arvind. Arvind is showing some buying interest, and there has been good buying over the last half an hour or so. And I would put a stop loss below 393, and I'm expecting a target of 404. Arvind could be a buy, could well be bought here. And also, I would buy Infi. I would put a stop loss below 737. It's likely to scale up to 747, 748, and test the day's high again. And in this swing, this can go up to 751 to about 753. Book profits around 750 levels, that would be better.
Okay, all right. Thanks so much for that, Ashwani, as well as Rajat, for joining in and giving us your trading strategies. By the way, keep an eye out on the Nifty. We're seeing a sharp pullback from the low point of the day. The big boy, Reliance Industries, that's fighting for the bulls. And after, a sharp correction from the top, you have Yes Bank as well that's moving higher. That was one of Ashwani's, he's quite positive. He's expecting a bit of a bounce on Yes Bank from here. And take a look at the intraday chart out there as well. Yes Bank moving higher from around that 405. It corrected to sub that 320 levels. But now we are seeing some price action on that front. But from the Nifty pack, the couple of ones that are doing well, Tata Motors, Reliance Industries, and throw in there, and ICICI Bank as well. Stock is up only around 1%, but close to 50% of that move has come in the last 20 minutes or so. Let's see how the European markets are doing. Remember, in yesterday's trading session, all the three frontliners, they ended in the green. We have a couple of central banks that meet later this week. Both the Bank of England as well as the ECB, they are scheduled to meet. Commentary is going to be tracked out there. Not expecting any movement in terms of rate action. But I think, okay, all right. I think as we speak, we're getting the initial rates from the European markets. It's more or less a mixed picture is what we're getting in there. Gainers from the Nifty pack, Bajaj, Finserv. Let's pull up the intraday chart actually out there. That's moving well. And a couple of these pharma stocks as well, Rima. Cipla and Lupin, both of them are seeing some price action in the last few minutes.
All right, take a look at the mid-cap index as well. The intraday chart will be up for your screen. There has been an up move in the mid-cap index as well. And a couple of stocks which are looking good or moving higher. You've got an Adani Power. In fact, a lot of the power stocks have moved higher because, as Lata pointed out, some of these stress companies will not be taken into the NCLT. There is a status quo. As per the Supreme Court directive, the case will next be heard in November. So till then, at least, there is a chance of some out-of-court settlement. So Adani Power is now higher by close to about 2% odd. OBC is moving up. Hexaware has a gain of close to about 2.5% in the IT pack. Arvind 2 in the red right now, but it has seen a recovery from the low point of the day. So these are a few of the stocks which are moving well in the mid-cap space. But Mehul Choksi, who is one of the accused in the PNB fraud, has rubbished all allegations labelled by the ED and the CBI. He says they're false and baseless. Listen into what he has to say.
Focus on the back of the depreciation that we have seen in the rupee. Remember, most of their revenue comes in from overseas. But to assess what's the impact of a falling rupee on the company's business, we're joined by Mr. Neeraj Ganeriwal, the CFO of the company. Hi Neeraj, thanks so much for joining in. Well, the street clearly they have given their verdict. They believe that Saxoff will gain. But we wanted to know from you, how much of your revenues have already been hedged, and at what rate have you hedged some of these revenues?
Hi Nigel. I think the rupee depreciating is definitely interesting for all exporters and especially for IT companies like us.
Okay.
Frankly speaking, our hedging policy has been quite consistent over a period of time. We hedge 50% of our revenues, overseas revenues, and we keep 50% of it open. Okay. And we have been consistent with it.
So on 50%, then you'll be gaining, right? The unhedged portion. And the 50% that you've hedged, what rate have you hedged it at?
So that would be between 68 to 69 because that's on a 12-month hedge basis we do.
Okay.
And the balance 50 is, as anyone's guess is, today it's converting at 72. Tomorrow we don't know at what rate it could be. Okay.
So net, what impact should we expect on the company's margins? As of the last quarter, your margins were hovering around 14%. Given the benefit on account of rupee depreciation, where do you see your margins by the end of this year?
Well, we don't know how long this depreciation is going to continue, but, if we expect that the rupee is going to depreciate at the rate at which it is happening today, I would believe that anything between 75 to 100 basis points is anyone's guess, which could have a positive impact on our profitability. And if it depreciates further, it could only be better.
So at 72, it's 100 basis points.
That's right.
Okay, all right. So there are benefits that are flowing in there, but what are the conversations with vendors like? Are they asking you, why don't you pass some on to us? Have those conversations started?
Fortunately not yet because, we've been consistent with our vendors. The customers have been quite consistent with us too. So we've not had a situation yet, but I'm sure if such conversations happen and someone is looking at what we're speaking now, they could definitely come up with.
Okay, so let's assume the rupee stays at 72, which means your margin should improve from the current 14% to close to 15%, right?
That's right.
Okay.
That's right.
Over and above that, can you extract higher margins because of efficiencies, automation, artificial intelligence?
Well, if you notice between last year and the current quarter, which we did, between June 2017 to June 2018 itself, we did have some improvement in efficiencies. So, and one of the things which I had mentioned in the past is we are moving our focus and trying to build in more and more offshore revenues as compared to on-site. So the more we focus on offshore revenues, the improvement is profitability is bound to happen.
So by the end of this FY19, what is your target in terms of how much of your revenues should come from offshore?
A 50-50 mix. So I'm hoping that we should be able to take our offshore revenues to closer to 55% and on-site to 45%. So that 5% increase in offshore revenues should definitely help us in improving our profitability.
Okay, all right. Neeraj, final question from my end there. Last year you did around 285 crores. This year, the first quarter itself, you delivered more than a 25% growth. So we're working with margins in the range of around 14 to around 15%. Top line, can we see a 20% growth? Is that on the cards?
Well, I've mentioned earlier to Nigel, we don't give guidance, but the only statement which I can make is quarter one, we had seen almost a 25% growth, and we strongly believe that we can continue to see that growth for the current full year too.
Okay. Thank you very much for joining in. So that is Saxo for you. The stock was a big mover today. The stock sustaining with a 10% up move. This is after the management saying that 50% of their inflows are hedged. If the rupee stays at roughly 72, their margin should improve by 75 to 100 basis points by the end of the year. And over and above that, as the company shifts more of their business offshore, that will be an added tailwind to the company's operational performance. Annual Capital Market Conference is underway in Mumbai. Our colleague Kevin Lee caught up with Rasesh Shah, the president of FICCI, and began by asking about what the short-term concerns are for the market. Listen in.
I think there is actually global volatility. I think currencies, emerging markets are under pressure. We have had a fairly good last 18 months in markets all over the world. The markets have been very stable. They've been at new highs. I don't think we should get unduly concerned, because if you look at our market also, it's about 3-4% down from the peak. I don't think that's a matter of big concern. In fact, what I think has been positive in India have been the flows in the local market by the mutual funds and Indian households. And that is actually keeping our markets very strong. For the first time, we have seen that for last 18 months, FIIs have sold and still the markets have been very stable. Equity markets have been very stable, which just shows how strong our internal economy is with the local flows. And I think we should expect a little bit of market volatility. We have always maintained that markets can fall 5%, 10% easily, and that's par for the course.
Speaking about the depreciation of the rupee against the dollar, various government experts have been saying, of course, that this is nothing to be concerned about. The rupee has been stable for the last few years, so this correction was overdue. Do you agree with that? Until what level should we not panic?
See, if you see the rupee on an annual basis depreciates by 2 to 3 percentage points every year. That is largely because our inflation rate is higher than the global inflation rate as a result of that. But unfortunately, it stays stable for 3 years and then it falls by 8-10% in the year. But if you annualize the depreciation, there isn't anything to worry about. The other aspect we should keep in mind is the rupee has fallen vis-a-vis the dollar, because everything has fallen vis-a-vis the dollar, all the currencies in the world. But if you compare rupee to Chinese yuan, if you compare rupee to British pound, we've actually not fallen much. So our global comparatively, we have fallen equal to a lot of other currencies vis-a-vis the US dollar. So I don't think we should panic. I don't think we should be concerned. There are issues around the rupee fall. I believe the biggest issue with the rupee fall is going to be on inflation. And as long as we can, through maybe cutting some of the state oil taxes and all, we can neutralize that, we should be okay.
Well, the rupee tumbled to a fresh all-time low, in fact, yesterday at around 72.7 against the dollar in yesterday's trading session, though it recovered by the time it wound up, coming in at around 72.45 to the dollar. Lata Venkatesh caught up with former RBI Governor Raghuram Rajan and began by asking him if the current situation suggests that we are on the verge of something ugly for EMs.
The Argentinian and Turkish case are special. They have had a history of problems, and this has come to the fore recently. It does signify some concern for other emerging markets. This is not a good time to abandon macro stability. You have to focus on reassuring markets that you are good for it. And unfortunately, countries that have growing current account deficits, that have large fiscal deficits, look particularly vulnerable at these times.
Well, how worried should we be about India's current account deficit and trade deficit? The last July number, trade deficit number, was as high as 18 billion. And at that pro rata rise in trade deficit, it could be 3% current account deficit.
Yes, it's that, and you also have a large fiscal deficit. Of course, the center has been relatively moderating, but the states have increased their fiscal deficit, and when you aggregate government fiscal deficit, it is quite large. I think the fact that India is growing quite strongly gives it some positive. But in general, I think we have to pay attention. Now, the current account deficit is partly a result of oil prices going up, but it's also partly a result of our export sector having been hit by the twin shocks of demonetization as well as the GST. We need to do everything on a war footing to get the export sector back up and running. Of course, the depreciation in the rupee thus far will help, but I think it's also important to focus on the impediments that hold it back to make sure that we are signaling to the markets that we're in the process of bringing down the current account deficit. It also means that we have to be very careful on the fiscal front. We cannot afford an election year budget going forward, given the kind of turmoil that there is there in financial markets. It has to be a responsible one.
Let's shift focus from the equity markets to the commodity markets. Manisha's with us. Manisha, over to you.
Thank you so much for that, Nigel. When you look across the commodity sector, it's only the crude oil prices which are trading in the green, nearly 0.25% to 0.5% on the higher side in the global markets, and that is because of the Iran sanctions being one part of it. The US administration seems to be going back and forth on how much will they waive off in sense of countries, which countries, and how much in sense of quantity, and that really seems to be bothering. Apart from that, it also has to do with the US and China trade concerns. Whether or not that would really impact the demand is still being calculated. But of course, it is a bit of a sentiment dampener that the crude oil prices see it as. We are joined by Sumit Bagaria now to talk more about that. Sumit, hi, thank you so much for taking time out. What is your sense for the crude oil prices? How is it looking on charts?
Hey, good afternoon, Manisha. Let's see, crude immediately it's quoting at around $67.80 in NAMEX. There is a possibility that from here on we can see some profit booking, and there is a possibility that we might see a fall of around $2 from present levels. That means on downside, we can see levels of around $65. As far as MCX levels are concerned, it's currently quoting at around 49.10 levels. One can initiate sell positions with a strict stop loss to be placed at 49.80 levels on higher side. This is purely a trading call for 1 or 2 days. And on downside, one can expect targets of around 4,800 and 4,750 levels. Immediately, the range for crude is placed between 4,700 levels on lower side to 5,000 on higher side.
But at the targets of 4,750, Sumit, do you see buying come back on charts, or do you actually see a correction and the price is staying there then?
See, overall, what we can sense by looking at the charts is that crude is getting stronger, and from here on, there is a possibility that from low levels we can again see a good upside move in which we can see levels of around 5,000 plus in next couple of weeks. So if we see any such correction of 100 to 150 points in crude from present levels, then at lower levels one should use dips in crude prices as buying opportunity for a short to medium term time horizon.
Point taken. Also, how are you looking at the metal prices? Because today clearly hasn't been a good day for that space. As we saw the Shanghai metals trade in the positive, the LME metals have been trading in the red, and that is where the Indian prices are taking cues from.
Well, see, there is a mixed cues in base metal specs. In base metal pack, the few commodities are looking weak to me, but there are a few commodities who are looking good on charts. Especially if we talk of copper. Copper is looking good to me. It's presently quoting at around 428.50 levels, and that's up by almost.
Okay, so that's a buy call on copper and a couple of other metals, but clearly not everything in the sector seems to be doing good. A couple of them which are actually holding well is copper, aluminum and nickel. Everything else in the negative.
Okay, thank you very much for that. Back to the markets then. Just mildly lower for the benchmark indices. Some more power stocks are moving higher, so add NTPC to the list. So that's getting close to about 1.5%. We have been talking about the recovery in Tata Motors and Reliance. Cipla 2 is now looking quite good. Lupin 2 is higher by close to about 0.75 percentage point.